Hi guys, this is Danny again. Now, a few days ago, the Bank Negara released the OPR increased by 25%. Now, how is that going to affect us as a user? Now, how interest rate will affect us? Now, we do know that not a lot of us are buying or investing in a property with cash. So most of us, even those people with cash or a lot of capital, they will tend to get loan from the bank because they just want to leverage. Instead of using their own money, they use the money from the bank, and their own money, instead of putting all the eggs into one basket, they will spread the risk into several investment vehicle. So again, when it comes to interest rate, how is that going to affect us? So this is the interest rate, the historical interest rate in Malaysia. Now, the worst part in this is back in '98, where we have the interest rate of 12.27%. Okay, now for example, if we have we are having 4.5% interest now for 500k property, we have 4.45% interest rate, and we are paying maybe 2003, something like that. But in the event, like if the incident back in '98 were to happen again, then we have to pay 3 times more. Back those time, a lot of people they went into bankruptcy because they didn't realize that the interest suddenly shoot up until their installments is like 2 to 3 times even more. A lot of people they're having the very bad time back then. And if you look at our interest rate now is around 4.3 until 4.6, depending if you're going is a commercial or residential. So the interest rate is going to affect us when it comes to our investment to buy or to invest into any property. Now, if you look into the house price index, it's clearly showed that if you look back into the '98, the interest rate increased to the highest ever in the history in Malaysia, 12.27. And then if you look into this part here, this part, I'm not sure if you can see the cursor. This part here, this is the property price just dropped down. It went down because a lot of people either they default, a lot of NPL, and also not just that people they default and they're unable to serve the loan, they have to foreclose their property, they went into auction. But at the same time, because the interest rate so high, nobody is going to get any loans. If they will have to have cash, they would rather to buy with cash, because it doesn't make sense for them to get maybe 7% return or 8% return, whereas the interest rate is 12%. It just doesn't make sense. So a lot of people that during that time, they would rather to buy in cash. And I can tell you that a lot of people, for those really seasoned investors that make a lot of money during downturn here, those people that ready, they will make a lot of money, because the prices are going down, and then a lot of people not planning to invest, and those people that have property, the markets are really soft and they are unable to sell, and that's why they have to reduce their the price, even though the price in the market is much higher than what they have to offer. Because if they don't let go of the property, they might get into really financial difficulty. So if you look at the this part here, when the interest rate is going down, we can see a lot of not only the prices are going up. The reason why the price is going up is because a lot of people are rushing to buy the property, and this is all down to the supply and demand, because a lot of people they want to buy a lot of property by taking advantage of lower interest rate then, so they keep on borrowing and therefore buying property because the cost to entry is much cheaper. And that's the reason why when the interest rate is going down, a lot of people they will tend to keep on buying. It's much easier to get loan. The cost is much lower. Yet again, you can buy much higher property. And a lot of people at that time, because everybody rushing to buy, and that's they will jack up the price. And this is what happening back in 2013. A lot of people they are making a lot of quick money from speculators, but I'm not sure, but for those people that actually buy correctly, they can earn a lot of money. But for those people that they buy property which hasn't completed yet, and they're about to get the key this year or coming year, they might have a little bit problem there because the market is still soft. But I reckon that those people that get the sub sale, maybe they're still okay, because sub sale you can get rental, and the new development there's no confirmation, no guarantee that you will get to rent out your property. At the same time, you'll have a lot of competition depending on which the location that you buy the property. Okay, so overall, the interest rate will will affect the decision of the market and us as the investor, whether or not we should get into property investment or not. Or maybe we can just few of the friends just get the funding, and then we just buy cash instead of getting the loan from the bank. Now we do know that interest rate is going to affect our decision whether or not we should buy into any property, or maybe we should invest. Now, besides the criteria that we're always looking at, for example, the price, location, target tenants, the thing that we always look into is the interest rate. Now, if you were to get any loans, or you want to think into getting mortgages, please make sure you shop around, check with the banks what's the interest rate they are giving, because we have nowadays is quite transparent. We have all the interest listed available for us to pick the one that most suitable for us, because the interest rate is part of your cost, and if you got it wrong, it might eat into your profit. Okay, I hope you guys learned something from here, and I see you guys next round.